You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to rock out once again with the Option Block. My name is Mark Longo from the old Options Insider. Vast array of outlets, the website, the network, all that fun stuff. Hope you guys are enjoying what you hear. If you do, head out there on your platform of choice, leave a nice review. We've been doing it coming up on 14 years now, which is crazy, terrifying to say out loud. And yet, new people continue to discover the shows all the time. If you'd like to facilitate that process, again, a review on your platform of choice could help people do just that. And of course, however you listen live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed love to hear from you guys. And joining me on the program today, first, let's go out to the land of homemade ice rinks, formerly known as the Mecca of options searches in the U.S., now a mere, paltry, meager number 2. Of course, we're going out to Maine, where we are joined by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. How goes the battle with Mother Nature over the ice rink, sir?
Well, Mother Nature's helping. So it's a little, it's a frosty 13 degrees, and all the frozen people are happy.
Yeah, 13 degrees. That'll work. That'll do it when it comes to ice rink building. Check out Andrew's posts on social media, listeners, if you haven't already, for a latest update on all things GIOVINAZZI Ice Rink Incorporated. That's his side gig. When he's not talking VIX or scaring away clam pirates, he's building ice rinks. All right, and also joining us, he's not usually from the land of ice rinks, but a little birdie has told me he may be heading up that way soon. He is the last emperor, Mr. KONSTANTIN VRANDOPULO, holding down the active trader hot seat over there from Fidelity Land today. Mr. Last Emperor, welcome back to the program, to you as well.
Thank you so much for having me on, guys. Reporting to you from balmy 60-degree weather, Jacksonville, Florida. I am actually going to be flying up to New England next week to spend a whole week for the holidays with my family, and I am not necessarily looking forward to the 10-degree weather, but I think, the holiday cheer is probably going to get me through it.
It's not Christmas if it's not around 13 degrees and a little snowy, right? That just makes it fun. If it's balmy and 65 like it always is down by you guys, what's the point? You can't have Santa in shorts, I've always said. Santa's got to be in the full suit or it just doesn't count. And let's see what else is counting in the market as we keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. I should mention here our old friend Uncle Mike on assignment today, so hopefully we'll get him back from parts unknown for our final show of the year and indeed of the decade. That's also scary to say out loud. Next week. But a lot going on in the market here today to parse. The day some have looked forward to, others have dreaded, has finally arrived. We have indeed impeached the president. This vote that's been seemingly lingering on, this process that has been unfolding for months now, it has pretty much played out the way just about everyone expected. The House voting to actually impeach President Trump. So he has officially been impeached, of course. People always misread what that actually means. No, he's not out of office yet. It's just kind of the start of the next leg of the process. But for the history books, he has been officially impeached. So we've officially impeached another president in the U.S. What does that mean for the markets? A whole heck of a lot of nothing. They're shrugging this off. Most of the major indices up pretty strong today. The Dow and the S&P up about 1/3 of a percentage point, and the NASDAQ bucking the trend even further to the upside, up nearly 0.5%. So markets liking this. They don't like uncertainty. We have a little bit of, I can't really say we have any certainty, and we have the next step in the process, really. But a lot of people think the next step of what's going to happen is pretty much a bit of a done deal as well in terms of what's going to happen to the Senate. The process seems to be unfolding pretty much along party lines, and if that continues to play out, then we pretty much know how it's going to end up. So maybe the market's liking that, getting this thing behind us at the very least. Either way, the market's rallying on this somewhat historic day out there in the marketplace. Gold and crude also taking a bit of a lift today. WTI north of 61 now, north of the 60 handle and into 61. So the lingering, perhaps, prospect of the end of the trade war, certainly a bullish sign for all things WTI. If you like a little bit of crude and everything else, we're going to do our year in review spectacular coming up right after this show on TWIFE. I'll be joined, I believe, in studio by the once and future Dr. VVIX as well, Mr. Russell Rhodes. So stay tuned for that, as well as our buddy, Mr. Sean, beaming in from who knows where the heck he's beaming in from. In the last couple of weeks, he's been in Europe, he's been in Singapore, he's been all over the place. So who knows where he's beaming in from, but he'll be beaming in as well. So we'll talk some small caps, we'll talk some all sorts of the big movers and shakers for the year when it comes to futures options. So stay tuned for that in a little bit. But first up, we got to kick through what's going on here on the old trading block. So let's start in the old Fidelity hot seat. Mr. Last Emperor, I've always said I enjoy hearing the interesting pockets of liquidity that pop up over there in Fidelity land. Who knew you guys were so big in small biotechs and pharma names over there in Fidelity land? Yet they're always on the tape. So what's lighting up the tape today, sir, in Fidelity land?
Yeah, so today, a couple of names that obviously were in the news this morning, a few names that are regular offenders, I guess, on the top of the list. So let's kick this off with the number one spot, Micron Technologies, symbol MU of 3 3.75 of 1%, up nicely, I guess, on an earnings announcement. And let me put it this way: the stock has had a hell of a run over the past 6 months. If you look at a year-to-date chart, the performance looks to be pretty spectacular, probably one of the better performers in the S&P 500, up 70% year-to-date. Had a great rally. Of course, if you zoom out a little bit to a longer time frame and you go back into a 2-year chart looking at, the troubles that the stock has had in 2018, it's quite amazing, right? It fell off a cliff. Trading at $64 a share in the summer of 18, all the way down into the troughs of the pre-Christmas carnage that we had last year into the high 20s. So it was just absolutely trampled on into the last end of the year, December, Christmas time, and here we are, right, off of those lows, substantially, kind of a follow-on carry-through. I guess some of these trade war worries subsiding as of late has helped the stock, has helped the chip space overall. Micron has quite a bit of exposure to China, from what I understand, and the numbers that they reported were also good. So, that's reflected in the stock right now. I think the straddle was pricing in around $2.50. Well, the stock is up about $2 on the news to the upside here. So a new relative 52-week high in the name, and Fidelity customers are pretty much split right down the middle here, 49% buys, 52% sells, but the name is trading very heavily, close to 5,000 orders on combined in this particular name. So Tesla is the second one that I wanted to mention, hitting a round number of 400 and actually slicing right through it. Another name that had a hell of a run. I remember just recently, right, talking to you guys going into an earnings event on Tesla. It broke a pretty significant downtrend. Similar pattern there, right, in Tesla, as we saw in Micron, moved from about 380 all the way down to 180 into the year end, or into the summer months of 2019, and we kept talking about all that crazy paper on the downside. Well, what do you know, right? From 180 into an earnings announcement, moves to about 255, pulls back. And in October, October 23rd, it was trading 255 going into an earnings announcement before gapping up to 300. A month later, it was at 340. And right now, in the middle of December, we're at 400. Just an amazing move. Again, trough to peak. Most recently, we are up over 125%. So a tremendous story here. A crazy recovery, for a market cap of this size. This is quite a move. Fidelity customers are split 50-50 roughly, actually leaning a little bit more to the buy side right now. 52% buys, 48% sells. The third name on the list is RAD, Rite Aid, and that name apparently is having the best day in over in a few decades, since April of 1982. So this company's been around for a while, up 43%. I was up more in the earlier hours. I was looking at it, was up almost 49%. Reported earnings beat expectations, just soared into the stratosphere here. So a name that is definitely moving. I was looking at the options markets in there. There's no chance, right? The options markets were pricing in this big of a move, and you can see that in the call option premium just ballooning up from where they were yesterday. So implied volatility-wise, another name that was kind of testing the levels of about close to 100 on the monthly contracts. Pulled back slightly, but obviously a move of this magnitude, of this size, cannot even be priced in by an implied volatility value of 100, if you can believe it. So past the 52-week highs here, past our November highs in RAD, I think November highs were roughly around $11. We hit a high of $12 plus today. $12.50, I think, was the high. So definitely past those previous highs. But Rite Aid is one of those names that has been a lot higher in the past. I mean, we go back to just a 2-year chart here. The stock was trading at $50 going back into January of 2018. And here we are sitting in practically single digits. So it was in a very strong, downtrend with a lot of momentum for a very long time. And I guess, the past 6 months or so, it's been basing and maybe finally potentially breaking out. So would be a name that I will be watching going forward. See if we can break out of this multi-month consolidation base and where we get from here. Fidelity clients are split 48% buys, 52% sells. I guess some people are using this opportunity as a selling opportunity potentially. So no, direct bias in anyone on any one side. Fourth name often is at the top of the list. Apple. What a performance! I guess all three of the four stocks have had quite a performance. $1.25 trillion market capitalization in Apple, reaching that peak here just a couple of days ago. But we've been trading sideways for a few days. Apple is unchanged, about as close to unchanged as we possibly can get. Up a penny on the day, $279.75 right now. Fidelity clients in Apple are actually the most biased, I would say, leaning to the buy side. 59% buys, 41% sells. A tremendous story, year-to-date performance in Apple. If you just compare it even versus a NASDAQ 100 index, which Apple is a big component of, just absolutely trumping the performance of the NASDAQ, even though the NASDAQ is a brand new all-time highs. We're talking Apple up close to 80% year to date versus the NASDAQ 100 up around 32 to 33%. So that's the story. There have been a lot of amazing outperformers out there this year, and we'll just have to keep an eye on them to see if they can sustain these rallies with all of this momentum going into 2020.
Good old Rite Aid. I remember the days that was in our pit in Intel as well. I didn't trade it, but other folks did, and yeah, up 42% today to a whopping nearly $12. But I recall it being a wee bit higher back when the folks were trading it up in our pit, and I was just looking at the long-term chart of it now. Yeah, it topped out in the end of the go-go 90s there, threatening $1,000, so quite a bit higher than where it is today. I also recall towards the tail end of that run, I'm looking at this chart now, because I remember feeling pretty bad for those guys who traded it. One of the reasons I avoided it was because it was kind of all one-sided paper. It was all puts all the time, and I'm looking at this chart. I could see why, because it went pretty much from nearly 1,000 in, January, and about early 1999. By the middle of that year, it was already down to 500. So it had lost half its value. By the end of that year, it was down to 166 and even lower. By the early 2000, by the new millennium, it had down to 131. So I could see why those guys were just doing nothing but selling puts. Everyone was out there saying, I want to be a market maker. Look at a chart like that and see how much you would enjoy making a quote-unquote two-sided market in a product like that when you know what the customer's up to before they even show up. So, yes, the good old days of Rite Aid. Mr. Rock Lobster, I know you spent time in many products over your 8-decade career in the option space. Was Rite Aid ever one? And indeed, what else is lighting up your tape out there today, sir?
The only time Rite Aid was one wasn't a couple years ago. Was in a deal. Is the deal finally happening today? Is that the whole gig? I haven't looked at it. I assume so.
I think it's just good results.
Yeah. Just good results, yeah. That's what I thought as well. Yeah, that's right.
Well, because I was writing up one of my picks for 2020 is Walgreens, and I covered it on Monday in our gold class, and yesterday I was doing the write up, and this morning, I'll start getting some orders put in because it was looking kind of ugly yesterday, so I figure I should have. Of course, this comes out today. You cannot buy an option in there to save your life in Walgreens. Unless you pay through the offer, forget it. So right now, all Rite Aid is a pain in my behind today because I'm grumpy and I can't get the fills that I want. So I think this is I think it's good news for the space. Well, part of it was like Amazon was going to kill the space, and now there is some upside built in I think a lot of these, these around the corner pharmacy names. So clearly it's happening. So I'm trying to get something done. I actually might even be filled right now, hopefully, but let's see. But anyway, that's my right now. Right mostly it's just making me grumpy at this point.
Well, outside of your love-hate relationship with the Walgreens Boots Alliance, I still love that name. It sounds like something out of Star Trek. Here come the Walgreens Boots Alliance. Red alert. What else is lighting up your tape, sir?
The curious case of there is a little. I mean, VIX isn't doing much. The Jan future got above 15 this morning for whatever reason. Other than that, I'm watching. I'm wondering why VIX can't go below 12. Like, we've had probably 4 days where the range is about $3 in the SPX, and there is still a bid for vol. Like, put butterflies in the SP, let's say in the SPY, stuff like that are very cheap. So there's a little bit of a disconnect. We're sitting here. We just had this trade deal, which, if you believe the numbers, could be, bullish and a positive thing overall. But the vol, VIX is not really behaving. There is not that willing seller of options yet to really crash the downside. So that's what I would say now is the thing watching my tape is I love the fact that the market's going up. That's great. That's super cool. But I would like to see VIX press into like that 11 handle. Like, really, even with the holiday coming up, like, I got to say, stop saying like. Other than that, I would expect the vol to press a little more, and we're still not getting it. And I don't know if that's because the rally was so hard to get here, which is always part of the deal with option skew. But at this point, that's kind of what I'm looking at. And the second is one of my favorite stocks to love. I love to hate or hate to love is Twitter is making a high from where after its earnings. So I'm wondering if it could actually break above 32 and kind of start moving along there. So that's another one I own some Gamma in. Vol in there is ridiculously cheap. So that's pretty much what I'm watching and see what plays out.
Yeah, Twitter coming in over there at number 7, at least according to the ORATS folks on their most active in terms of volume versus ADV. So their volume today versus normal volume. They're coming in number 7. They're nearly 2x their ADV right now. Coming at showtime, they're at about 90,000 contracts. But we're getting ahead of ourselves here to see what our top 10 is. Before we do that, let's go out to see what's lighting it up out there in the broad market on this post-impeachment trading session here. Most of the indices doing really, despite the decent move today, not a ton, a decent amount. It kind of depends where you're looking. If you're looking at VIX, you're not going to find a heck of a lot. VIX is not even at 100,000 contracts yet as of right now. Of course, the ADV has grown substantially since the last time we chatted. I remember I mentioned in the last show, listeners, that those numbers over the last week or so are probably going to move the needle a bit out there because we have been talking for a while how the ADV in VIX was struggling to maintain over 400,000. Now it's threatening 500K, about 486,000, as a result of some pretty heavy action last week out there in VIX options land. No days hitting 1 million, but getting close to it a few times, 700 plus thousand out there, and that's going to budge the needle a bit. SPY doing decent paper today, at about 1.6 million as of right now. The ADV is right around 2.6 million, so about 1 million north of there. The S at about 750,000, the ADV about almost 1.25 million, so getting close to that out there as well. The Q is doing about 225,000, the ADV just a tick, just a hair under 500K out there. And the IWM doing about 220,000 contracts as of right now. The ADV just a tick north of 300,000 out there. Moving on out to the top 10 most active single names out there. A good thing Uncle Mike isn't here because he'd be offended by our number 10 name on the list here. Cost you $1.28 to get into the top 10 right now. That'll get you to Cisco over there, Uncle Mike's favorite name in all of the market. Number 9, the aforementioned Twitter. The number 7 on the ORATS list. Number 9 overall here for us here, 138,000 contracts in Twitter. Number 8, NVIDIA, 141,000 contracts on the tape. Number 7, the gift that keeps on giving. That's Roku, 165,000. Set-top boxes, who knew? Who knew that was the thing? Number 6, Netflix, 220,000 contracts. Number 5, good old AMD, kind of a bit of an all-stars of the top 10 out there today. AMD, 227 on the tape. Number 4, Facebook, about 240 on the tape. Number 3, Apple, a paltry, a meager number 3 with 303,000 contracts. How dare they not be number 1? Let's see what's above them today. Number 2, Micron, tearing up into the top 2 today, 330,000 contracts. Number 1 with a bullet. I'm guessing you could probably guess which name this is. The last emperor alluded to it. If it's a hot day out there and Apple's not the top, good chance this one might be, and it's Tesla. 459,000 contracts on the tape right now. Let's see where good old Tesla is lurking right now. It's up another whopping 10 handles, or about 2.6% over the 400 handle right now, at about 404. People are talking, it's closing in on that 420. The 420 level that Musk got in so much trouble for. But apparently I can't see what the news is that's driving it here today. But outside of the looming prospect of 420, let's see what the most biased paper is out here. Looks like it's AMD and Roku are both tied at 70%, but number 1 is actually Twitter, with 82% of the paper fallen on the call side of the ledger. Since we're coming up near the tail end of the decade here, crazy to say that, end of the decade. Not quite our last show of the decade yet, the listeners. Got at least one more in the hopper, I believe. I think one more on Monday. I was going to mock Uncle Mike with this, that, his old friend XLE, I think the Stock Twits folks crunched the numbers of the best and worst performing sectors of the decade, and XLE taking out the bottom portion there. XLE up a mere 35% over that 10-year span, so not exactly a good one. If you want to know the best, I think it was the materials select sector with 128.5% to the upside. Also worth noting, our old friend XLF, the other X out there we talk about a lot, back above its high, so pretty much right before the global financial meltdown hit. XLF, of course, is the financials out there, listeners. And the financials closing above that level. So that's a level that people have been looking for, and it hasn't really hit it, but now it managed to do it. So maybe, who knows, maybe the financials are poised for a breakout. We shall see as we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what the heck is going on in the weird, the wild, the whimsical world of all things weird in the world of options. I'm going to kick things off with a name we don't really talk about a lot here on the old Odd Block. This is everyone's favorite. I'm just trying to make sure we got all the good quotes going up here. Yes, there we go. All right. Yes, there we go. It's Viacom, but this is the Class B. So Viacom CBS Inc. Class B out here. Trading today, let's see, looks like about 42 and change, 42.18, up a buck and change out here on the day. The ticker for this is VIAC. Looking at here right now, it's an interesting print out here to kick things off, Mr. Rock Lobster. I'm looking out here right now to see how much total we have on these bad boys. It's VIAC, not a ticker we talk about very often here on the show, lighting up in the weekly calls in January. The Jan calls expiring on the 3rd, the 43 halves. So these are going to be a little more than a buck out of the money. So we're at about 42.20 right now, so a little more than a buck out of the money calls, going up for 45 cents. Kind of split in the uprights, as you might imagine, not the most active of names or months or strikes out there. So these options were 32 cents at a double, at 55 cents. This print going up on the MIACs over there. For some reason, this also marked as floor. As far as I know, the MIACs folks don't have a trading floor, but hey, maybe something has changed since the last time I chatted with them. Worth noting, there is earnings, but not in this cycle. Earnings are on the 13th of February. Also worth noting, a decent amount of these have traded today, a total of over 13,000 on the day. So kind of a weird one to kick things off, Mr. Rock Lobster. But hey, it is the odd block after all. Kind of mid-market, very near-term calls going up for size in the Class B of Viacom. So first off, what's your spidey sense telling you? You think our friend here is gobbling these up? Is he overwriting? And then what's your take on the size we're seeing out here in these? Kind of a weird print to kick things off, Mr. Rock Lobster.
It is a weird print. It feels like these are right, to be honest. There is not there just isn't much of a bid for them, you know. I'm looking at the market in them now. They're like 40 bid for 17 contracts. So I'm not seeing a lot of interest there. So that's what I would say is like, it's the vol. Yeah, well, I'm looking at the implied. They're showing the implied vol's up 2 points for the Jan 3rd cycle. So I maybe I'm wrong. It's tough one on a price, but I'm looking at, I'm just the way it like traded in the middle like that. It feels like just that's the kind of call a customer would want to write. It's not like Viacom is a big mover or something like that. That would be my at first blush. Now they are showing the vol up a couple of points, but the markets are semi-wide, and those calls are definitely they're trading a little lower right now than 45 cents. They're 39.43. So it just doesn't. It feels like if somebody came in and bought them and really took liquidity out of the market, I feel like they would be a little more bid than they are. That's my take on those. I just don't see it.
Yeah, and I think I see why my system is choking on these, because it says these are the Class B, but a ticker showing the ticker of VIAC, which you would think would be the Class C shares. So I think VIAC, something is gumming up the works there on the quotes from a ticker front. So that's probably why it's not spitting out my usual amount of data here on these bad boys. But still, someone is up to something here on the upside in very near term weeklies. I'm not averse to your interpretation of this one, Mr. Rock Lobster. It certainly is very near term. It's expiring on the 3rd, so that does kind of lend itself to probably an overwrite, because people like to get their premium in while the getting's good and then get the heck out of Dodge. So if he was swinging for the fences, he might go a little bit farther out. But then again, we've seen stranger things. This is the weird one. I hate to do it because we already have so many, but and the data on this one is so, shall we say, convoluted. But I'm going to put this in the to-be watched category. I think we'll come back to this one in a couple of weeks and see how our friend fared in the Viacom Class B/Class C shares out. Let's move on to another name that we can actually sink our teeth into a little more. This is good old Discovery. Just Discovery Inc. Now, it used to be Discovery Communications. I guess it's Discovery. Well, still Discovery Communications, also Discovery Studios. I guess now this is effectively the mass company that acquired all those pieces of Discovery Channel and just about everything else out there in that oeuvre. Now trading under DISCA, DISCA, is the ticker. And if you go out there, this chart looks interesting. Looks peaks and troughs. Looks kind of like a biotech from a distance when we see the actual amount of movement in terms of price action. Not quite so much. A year ago, it was trading, about 25.83. And then we got up to about, the 29 or so, then sold off back again to about 26, and then back up to into the low 30s, 31.5, and then right back down, kind of like clockwork, to 27, then back up again. Now we're getting into July. It's about 32 in mid-July, and then by August it was back down to 27. You can see where I'm going with this. And then right back up again to about 33 and a third or so, and right now it's kind of off that a little bit at about 32.75. So near the upper portion of its on-again, off-again 52-week range. So let's see. Looking at this, you might think maybe someone's favoring some puts for the inevitable downturn, if you buy into what this chart is selling. or perhaps someone loading up on some calls to keep the upside party going. Let's see what our Eye of Sauron returned for us today. Nope, it's on the put side of the fence. It's so pretty meaty puts as well. These are the Jan 40 puts going up 8,875 times for $7.31. Wow, that's a meaty put, Mr. Rocklops. Don't see a lot of $7 puts going up out here in the old odd block land. And let's see, these are clearly opening. Earnings are on the 25th of February, so this is not a earnings trade. Worth noting, the market was 720 at 7.5, and these went up for 731. So certainly bid adjacent, if not quite on the bid itself. Interesting print too, 731 for nearly 9,000 of these bad boys. I just want to pull up here really quickly to see if any more went up on the day. No, that's pretty much about it. That's the total of it. Oh, also worth noting, you know what? There are looks like that was one leg of some other fun. I thought that one looked a little weird. So our Eye of Sauron sometimes only returns one piece. We have to dig to find the rest. It looks like Mr. Rock Lobster, when we dig a little more onto this bad boy, the Jan 40 puts are what came up across our radar first, and that kind of triggered the alert. We dig a little more, we also see the Jan 40 calls going up for 4 cents. And then we've got the D's 40 puts and the D's 40 calls also going up 8,875 times. Looks like we got a little bit of an old convert-revert going on out there, rolling the love from D's to Jan out there. That makes a little bit more sense because on the surface of it, this put print by itself, kind of a bit of a head-scratcher. Is that what you're feeling as well, Mr. Rocklops? Someone rolling the party on out to Jan from D, sir?
Yeah, a totally odd trade, by the way. It's a bit of a head scratcher why somebody would put on that size of reversal conversion. And this, by the way, full disclosure, this is a stock I follow, and I have a position in it. I'm long some April options. This is like one of my value plays. Actually, one of my students brought this to my attention. I'm like, damn, this thing is cheap. So anyway, this is an odd one. So they have paid a massive dividend once before. I don't know how they're going to fit it in the Jan cycle. So it is possible they're going to pay. I don't know, to be honest. I find it odd. This trade, it's really odd. And what I've learned as a market maker for a long time is you probably learned that nobody puts up this kind of stuff without a reason. It always surprised me when they can find the other side. So maybe it's just a roll, like a call put roll. But still, I'm seeing pieces go up, and I am curious. So the only I can think of is some kind of a dividend play or potential special dividend. Discovery doesn't pay one, but I am seeing they did pay a really large special dividend many moons ago. It is a curious one. But if they pay a dividend and it makes everybody happy and the stock goes up $5, I'm not going to be angry with it.
Yeah, it looks like they're keeping some of that long stock party, synthetically at least, listeners, alive for another month. Looks like they're selling out the DIS, and they're opening on the Jan. Obviously, the Jan, selling puts, buying calls, getting synthetically long, getting long those vestigial Jan 40s for a whopping 4 cents. But still, that looks like what they're up to. You know what this means, Mr. Rock Lobster. I was hoping to whittle down that to-be-watched category here for us soon, but now that means we have to add another one, because this one's just too weird. I guess we're coming back to a name you clearly trade for size. Is this you, Mr. Rock? Was this you slinging this conversion reversal out to Jan? We shall see as we keep on rolling it. It's been a weird one, that's for sure. Living up to the name here today. Let's see if our last one can deliver the weirdness as well. This is Tanger Factory Outlet Centers. We talked about these not too long ago. Some of these names that were, I believe, were profiled in Barron's. And I'll have to pull up. Oh, Mr. Rocklobster's talking. I'll have to pull up what we talked about with these guys last time. But we have this name does ring a bell. Ticker symbol SKT, because why wouldn't you call the ticker SKT if your name is Tanger Factory Outlet Centers? It makes total sense. Trading today, $14.90, up about a penny. Not really a big underlying moving day out here. Let's look back at the year that has been. A year ago, this thing was trading about $21, so a wee bit north of where it is right now. It's like it topped out around the end of January at about 23 and change. And then it kind of has been a long, slow slog to the dark side ever since, kind of bottoming out around 13.5 back in actually late August. And then it kind of turned around again back up to about 17 and change in October, and then kind of sold off again down to where it is right now, a little bit shy of the 15 handle. All that brings us out to what we've got going on out here today. This is another one where the Eye of Sauron delivers one thing, then you got to dig a little bit to find the other side of it. Because first we saw the June 16s going up 6,342 times for 70 cents, lifting the offer opening over there on the Philly. So it seemed like it was just an opening call party. But then we dug a little bit more, as we are wont to do, and we found that there was another leg to this. There was March, which makes it interesting in and of itself, also going up 6,340 times. Guess what? On the bid. So someone doing the old roll of the March 16s out to June 16s, doing that for a whopping 30 cents, also there on the Philly. Worth noting, there are earnings, but all this earnings stuff goes up before the March contract even expires. The earnings are on February 12th, which makes the timing of this even more bizarre, Mr. Rocklobster. You don't usually see a lot of people rolling March upside in December. Usually they're putting it on then, and then maybe they roll it when it gets a little closer. But our friend here, for some reason, deciding to take the opportunity, maybe getting while the getting's good, to roll that March out to June, doing it for 30 cents, and also doing all of it, post-earnings, which is kind of interesting. Mr. Rocklobster, what's your take on this one? Rolling your March out to June and doing it in December.
Maybe they got satisfaction out of their March options. Maybe they got everything they wanted out of it.
I've gotten my full amount of allotted value from these. I shall now roll them to June.
The Tanger Factory Outlet Centers, REIT Inc. Don't you? I mean, it's one of these things where maybe they like, okay, they're doing it right, and all of a sudden they're getting too close. Is that possible, do you think? But the pricing really doesn't look like that. It looks like they bought them, they didn't like them, and now they're, I guess the only thing I guess is that they want more time and they think they're going to make more money, and that's all I can think of on this one. And of course, we've seen people be right like this, but I'm trying to get a little more info here from the stock, and I can see. All right, if you look at how the stock is traded. Like it had like a 14 low. It's traded like as high as 18, and I'm having a hard time believing that they actually made any money on the 16s that they bought. So a really odd one, like a REIT that loses 30 or 40% of its value. So I can understand, I think, why they might want to buy more time. And it looks like that's what they did. So if you want more time, it's not a bad idea. I just don't know what, really they paid for. We'd have to do a little digging on the March side. But it does appear like they're closing out what they own, and they're trying to get, rolling out to June. So, but maybe it's just things aren't moving fast enough for them, so they're hitting the brakes.
They're getting while the getting ain't exactly good. But interesting stuff. Worth noting, I thought this name sounded familiar. We talked about him a couple of weeks ago on the show, Mr. Rocklobster, on the 2nd, actually, when we talked about a rash of line in the sand puts in all of these REITs that invest in or build or own factory outlet malls and outlet centers. It was Tangier was one of them. Someone blasting out nearly 14,000 of the DIS 15 puts for 21 cents, which, spoiler alert, those were looking pretty dicey. Coming into today, they're still at about a dime, so he's got a day to go, obviously. These things, he's pretty much pinned at that strike. Someone also blasted out the DIS 25 puts in Macerich for about 12,000 times, and Taubman Centers Inc. for 22 cents as well. So maybe we'll have to come back to these next week and see how they all perform. But yeah, that was a crazy REIT put writing palooza. I think we had a listener listening live who chimed in that they were all profiled that weekend in Barron's. Maybe someone keeping that Barron's level alive. Meanwhile, speaking of listeners, it's time for you guys to join us on the show here with a little bit of the old Thursday mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block on Thursday. We'd like to you guys take the reins with your questions, your comments. We also like to peer through the curtain into behind the scenes in Fidelity Land, see what the Fidelity folks are asking, what they want to know this time of year, what they're calling up the desk and saying, Last Emperor, explain this to me. Sounds like, Mr. Last Emperor, they've got some queries about extreme levels of implied volatility and whether or not they should be diving into those waters, sir. So regale us. What are the folks asking you about extreme vol over there these days in Fidelity Land, sir?
Yeah, so I have a few very good examples for this particular topic. It has been asked not just of me, but of quite a few of my colleagues. It's a question that comes around frequently, especially during an earnings season. But here are my thoughts, right? So let's start with kind of analyzing what we're dealing with going into the year end. Tomorrow is the Quad Witch, right? So we have a pretty big day, and that means that if you're trading SPY or options in SPY, you should be aware of the fact that they're paying or they're going ex-dividend tomorrow. So if you're looking at tomorrow's expiration, Friday options at the money, and you're thinking that the calls are 3 times less expensive than the puts, you didn't find a gold mine. As we all know, exchange-traded products get reduced down by the amount of the dividend payment. So be aware, right? That's the thing, number one. Now, number two, going back to December, approximately, the same time frame, or I generally look at December 31st, kind of to see what the expectations are for a yearly move based on the way the options are trading. So last year, December 31st, I remember this really well, I was looking at SPY options, I was looking at SPX options, I was looking at the value of VIX at the time, and at the value of spikes, right? So regardless of which one you were looking at, spikes and VIX were pretty much in agreement that 30-day implied volatility was looking at around 25%. If you were looking at implied volatility of SPY at the money options, there was around 23% for the 30-day options. Now, we were in backwardation at the time, so that means that front-end contracts were pricing in higher levels of volatility than the back end of the curve. But if you were looking at leap contracts last year that are expiring in January, right, of 2020, the implied volatility of those contracts was around 21%. So it doesn't matter how you slice it. You would have imagined that, listen, going into the year end after the carnage that we've seen in Q4, the expectations for market, range, right, S&P 500 range, going out a year was a lot wider or bigger, right, than where we are right now. You look at the value of VIX right now, 12.5. Spike is at 12.4. So we're roughly around double of the expectations. Now, you look at the value of SPY where we're trading today, or you're looking at SPX, and we're actually trading outside of the expected move for the whole year. So if you take that 25%, remember that's an annualized number. You take that 25%, from the value of SPY at the time of 250, that would have put us roughly somewhere around 313 or so. Well, we're trading 321. So what I'm trying to portray here is that even when implied volatility expectations are, at a relative extreme in a product like SPY or SPX, you still can have, right, pretty decently outsized moves. If you just went in there at the last day of December and you shorted a straddle at the money put and at the money call, you are right now down money, right? which is quite amazing. I mean, you would imagine that 68% of occurrences would fall within this range, and yet we're, very nicely outside of it in one direction to the top side, right? So that's one example, I guess, in the broader markets where, imagine that you were just trading one side of the market and you got the direction correctly. Well, you're not paying, right, the full expected move to both sides. You're not buying a put and a call. If you got the direction correctly and you were just bullish the S&P and you bought SPY calls at the money or SPX calls going out a year, you're probably up over 100% on that position. So it's an example where implied volatility is high, but yet the actual move, right, the realized move, is greater than the market's expectations at the time. Now, I have a few other examples, and we got plenty of them, right? You could have outsized moves to the upside, outside moves to the downside as well. Tesla, I mentioned that was a stock that was being traded, had a hell of a run. If you just think about the last earnings announcement, I remember speaking with a client just recently, stock trading 255, right? Upside calls, relatively expensive. You were looking at 51% implied volatility, monthly implied volatility in there. Well, you would have been looking at premiums saying, wow, those are really juicy, right? I have to pay a whole lot of premium if I want to be directionally biased, in any way. Well, what do you know, right? A month later, after the earnings announcement, outsized move, and into basically, a month later, November 20th or 21st, you were up in Tesla in 1 month 40%. So that's an example of an outsized move to the upside where premiums were, at a relative 52-week extreme. But if you got the direction right, you definitely got paid, right? The example of an outsized move to the downside on earnings most recently was Ulta a couple of weeks ago, where implied volatility going in, or a couple of months ago, the implied volatility going into the event was close to 50. That was back in August. And, you had a one-day move in there, just a complete collapse post-earnings of 25%. And a few days later, you were down 33% in the stock. So again, if you got the direction correct, even on an extreme level of implied volatility, you got an outside one standard deviation move. And, right, if you got the direction right, you got paid pretty heftily. Now, last thing that I'm going to mention, and this is probably the craziest example that I've seen in a long time. This is a real true story. We had a client call in who was trading stock in AXSM, Axsome Therapeutics Incorporated, had a pretty hefty gain on the position, and the company was actually supposed to announce a phase 3 FDA, trial results. That was happening like the second week of December, right? So the stock went from, about $15 a share all the way up to around 45. And, that was a 300% return from just in a couple of months. So the client was like, well, I don't really want to take out that much risk going into this phase 3 trial event. Could go either way. I would like to, take a lot of the gains off of the table and actually play options in this thing. So we looked at the options markets, and yes, they're not, ridiculously liquid at the time, but the juice in the monthly premiums going out to January was 270%. And that was a 52-week extreme, right? So we're looking at it and saying, all right, that's kind of crazy, but is it possible? So what happens He decides to go and buy way out of the money calls. I think that they traded 70 strikes on the long side to kind of replace some of that long delta. Well, it seemed crazy at the time. Phase 3 trial results, got released and the stock jumped up all the way to $100 a share. Well, if you traded 70 strikes for 7 points, and at the time, 70 strikes were, depending on where you caught them, $25 to $30 out of the money, you would have been thinking, well, that's crazy juice, right? I would never pay that kind of money. Well, you would have probably quintupled or quadrupled your money if you, depending on where you caught it on the upside, if you were able to hold through the last couple of days and actually sell them closer to their highs. So just because implied volatility is a very high number, it doesn't mean that the market, the eye of the Sauron, right, as we like to call it, knows all. I mean, just because one standard deviation expected move is X, it doesn't mean that we can't move outside of it. There's all sorts of examples where we move outside of that expected move to the upside or the downside. So, keep that in mind. Don't always approach something from the perspective of, if implied volatility is high, I want to be a seller of both sides of the market. Figure out, right, what the chart looks like, what the trend looks like, and believe me, right, option premiums a lot of times underprice the actual moves that do occur. So don't take it as a be-all statement ever, I would say.
All right. That music means we're going to have to leave that conversation there. I'm sure Mr. Rock Lobster has things he's champing at the bit to get in there, but the music says otherwise, Mr. Rock Lobster. But before we go, let's go back around the horn. We'll kind of do a quick combo around the block for what you're watching for the rest of the week, as well as what you're working on that may interest our audience. We'll start with you, Mr. Rock Lobster. What are you watching for the rest of this week as we head into the holidays here? And also, if folks are intrigued, they want to reach out to you maybe with some ice rink maintenance tips or things like that, where should they go? What should they do?
Well, first they go to optionpit.com to find out all that stuff. Check out my vol newsletter. My students love it, so I'm going to keep writing it for another year at least. And I'm watching this market wanting to go to all-time highs again, and this pesky VIX not dropping. So it is giving me a little concern, not a lot of concern, but let's just call it baby concern. Little concern.
Baby concern. Interesting. I'll have to check you in with Mr. Dr. VIX. He should be here any minute for our next show, and then I'll have to see if he shares your concerns on all things volatility. Speaking of all things volatility, if you would like a newsletter breaking down such things, then optionpit.com is the place to go. Check it out. Sign up. Make Mr. Rock Lobster happy. Then he can keep his ice rink going for his kids for another day. So optionpit.com is the place to go. And last but not least, Mr. Last Emperor, if folks want to call you up, maybe they want to bend your ear with questions about high and low volatility, whether they should dive in or not, where should they go? What should they do, sir?
Yeah, Fidelity.com/options. Open an account, apply for options trading. Fidelity.com/coaching to see myself and some of my colleagues that appear on the show on camera, screen sharing the platform and talking to a particular topic of options coverage and answering your questions in real time. So it'll be a pleasure. Again, I just want to remind everybody about this VIAC dividend. That's a big one that generally hurts folks who are not aware. We're watching markets at all-time highs with an outsized move in SPX and SPY going into the year end. So quite an interesting year.
Yes, that SPY dividend. Uncle Mike couldn't be here, so of course he can't do his duty to remind you of the SPY dividend. So Last Emperor doing it for you. Remember, Fidelity.com/options is the place to go if you want to begin your journey on the dark side of options, that is Fidelity. And by the way, if you're already a Fidelity customer, you're saying, I didn't know they had all this cool option stuff, then reach out. I've done that recently. I've recommended a few Fidelity clients have reached out to us to reach out to the Last Emperor and others on the team there and pick their brains, and they've been amazed at what they have to offer over there from an options perspective. So if you have maybe a latent legacy Fidelity account you haven't touched in a while, maybe it's time to blow the dust off and start trading them their options over there. Fidelity.com TSLA.com/options is the place to go to begin the journey. Of course, our friend Uncle Mike, he's in parts unknown. Check him out over there as well. stcharleswealth.com is the place to go. And on behalf of the Rock Lobster and Uncle Mike and the Last Emperor, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in great questions. Keep them coming. Maybe on Monday for our final wrap-up show of the year, maybe we'll do some fun listener mail palooza. We shall see. But, of course, we're not done yet. If you're listening live, stay tuned. We'll give you a little bit of fun, maybe Roku straddles and some good stuff to bend your ear with. And I'll be back in exactly 26 minutes with Dr. VIX and a few others, perhaps, to discuss what a year it has been on the futures options side of the fence. We're talking volatility. We're talking all sorts of fun stuff. So stay tuned for that. And then we'll see you back here tomorrow, 1 p.m. Central, for Vol Views. And we do it all again on Monday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.